Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording 20 minutes before the close on Friday, the 26th. Barry, January's done.
It, you
What
know,
happened?
it's a runaway train. That's what it is.
Yeah,
And I'm not talking
time,
about the S&P.
right? Time is a runaway train. That's a very good point.
Yeah.
Anyway, for those of you who don't know, my name is Ben Maldonado, and I'm here with my partner Barry Hadarachi, and we're happy to do this weekly show for everybody. This week, we're going to be talking about Barry's going to cover, as he always does, the big five, as we call it, which is ES, bonds, gold, crude oil, the dollar, the euro, and copper. And he'll even talk about a couple bonus topics like the Nikkei or the Hang Seng, the Dow, maybe even nat gas. So I am going to be covering the commodities as I do each week. This week, we're going to be talking about wheat, coffee, copper, and crude. So we got a decent amount to talk about this week. In the ES, not a lot happened this week, though, Barry. What's your take? I see a lot of chopping for the last 3 or 4 days, just looking at those bars.
hmm And I think what happened quietly, especially
Mhm.
the last few days, to see, let's get into the 30-minute. Maybe we can see a little bit more. Well, this is why nothing happened.
Exactly.
But something did happen, which is we got on top of this
Yes,
48.94.
sir.
You
Yes,
know,
sir.
that was the deal. So just to give you guys a quick sketch, this is a 30-minute chart that I post on X and every morning. So really the talk coming into the week was about if we can hold above 48.70, then we should test the 48.94. And there's really no weakness unless we take out 48.70 at the time.
Hmm.
And if we can settle above it and hold above, which is what this is, since that's 48.94.
Perfect example of it,
Yeah,
right?
it's a great example. Yeah, break above, hold above. Then we can expect the market to continue to test 49.26
Hmm.
until we get above it. And that's what we've been doing. We got a 1 and a 2 and a 3 and a 4.
Hmm.
So that's a lot of tests.
Yeah.
But it's keeping the momentum more or less to the plus side because we are making higher lows. But quietly, this transition from 48.70 to getting above 48.94 far as squares go, it's a big deal because this is, if you look at this corner that says 720, that's 720 and 720 degrees up. It's a major square on a lot of charts. And from the low, I mean, it's from the low in January and also the low in October,
Hmm.
right? So this area, this level, this area is very important. And we managed to very cleanly, we've had this level here for a while and it's very clean coming in, testing, two test, got on top, and we're holding here. So that's where we are. Now let's get back into the daily and see what's happening. And we left off where we left last time. We left off with the ABCD potentially closing here,
Hmm.
right, Ben?
And we pushed through it. Yep.
And we pushed through it. So we don't have to drag this on a whole lot longer. That was the ABC. We pushed through it, period, done.
That's right.
And I can't remember if I had this 49.46 drawn in last week or if I dropped it in Monday. Anyway, the half square is 49.90 and we have 49.46 as the next point of resistance. So let's take a look. I think it's a good time to kind of go back and review a little bit. If you've been watching every week, I'm not going to cover every little detail, but I want to just kind of sketch it up, see how we're doing. I mean, if you look at the move, this is very, very, very strong, right? We're climbing at a very steep angle, way above the one by one. And we had a 90-degree mark here. We were looking at the square 90 prior. The reason I put in the 72 was we looked at how it came right back down to the 72 degrees before we moved higher last week. And let me get the 90 on there. So he hits the square 90. And the whole talk before that, as we were coming in December, we were looking at this 90 and saying, hey, that's going to be major resistance. And then we squared out here, price and time, and we said, well, that normally could change the trend. And we wanted to see what the first counter trend looks like.
Mm-hmm.
Well, what happened was everything kind of played out textbook style. We came into the high perfectly, came back, turned down, came up for the first counter trend, but it just sort of held up higher. It didn't take
Mm-hmm.
out the prior low. And that's sort of a telltale sign. Once the counter trend is finished, we start going in the same direction. If we're expecting this high to hold, then you don't want a reversal in the middle of that, like that, what happened here.
Correct.
Now if that happens and we hold under 48.51, that normally means we're probably going to consolidate a little bit or do some kind of shenanigans before we sell off. On the other side, we were talking about, well, if we can somehow get above 48.51 and we hold above it, then it's bullish. We have a whole nother square that we entered, at least half a square.
At least, yeah.
Up until here. So that's kind of the story coming off the October low. Now, if we go to the September, October lows a year ago, then if we go to the low, we have
180.
That's where 49.46 came from. So we have 180 right above us.
Mm-hmm.
And this is not coming from some kind of correctional low. This is coming from, the big low that came in the middle of the
October of 22. Yep.
That's right. So now the square is solid. Everything's good. Everything's, it's a good square.
Mm-hmm.
So looking at the bigger picture, meaning looking at from October low, you can see why we're kind of starting to stall out. We had 3 days just not being able to make any headroom. Why? Because we're approaching 180 degrees off that low, and that's a natural resistant point. As much as this 90 was a resistant point, you can see the first time we approached it, we sold off. The second time we approached it, came up, made a higher low, lower high, and sold off again. Mm-hmm. Came back again, and look, I remember this time, if it just couldn't get on top of it,
right.
And finally we had the breakout pattern, got above. Notice this big break. You see the big break here, the big bar, and we held above up in here like a little fourth wave-ish kind of expanding triangle action.
Mm-hmm.
And then we, sailed on. So when that happened, we were talking, if you guys go back to the episodes back in May, we talked about, if it gets above 90, well, that opens up an entire square. All right. So at the time, it didn't seem like, it's possible.
Right.
But, these are the markets, anything's possible. So what happened? We got above, and you can see when we talk about holding above, if it gets above and just hang out up here, hangs out just above it, it's fine. But here we have a big old gap and a lot of air under it. So it looked very bullish. And what happened? We ran right up to the half square, which I think we squared out here too, and we corrected nicely. 3 months, 90-day correction, almost 90 bars or 90 degrees. And it was 270 low to low, and we took off again. So now we're, I'm not saying we're exactly at the 90, but it's another, it's an expansion of it. It's a second square.
Yep.
And we're coming up to very, very strong and hard, going right into it. And we have a 360 by 180 coming up also over the horizon in about a month, let's say. When is that? February 28th. So I think the story now is it's 49.46 is really the resistance we have to work with. And it looks like we really want to push up in there, but this is kind of the area where we always run into some kind of air pockets. Sort of like what we did here, we ran up, and all of a sudden, a couple of days later, let's go up in air pockets and then down again. Same thing here. We, as we were trying, you can see that, 2 to 3 days up, 4 days down, 3 days up, 3 days down. So it's possible we do that kind of a pattern. If we do that and we manage to hold above 48.51 while we're doing this kind of a pattern, I think we can expect it to break through. You know,
It's another, yeah, it's a bullish pattern, basically.
Mhm.
Bullish consolidation.
Right. Exactly. And we don't have a lot of these to work with, especially coming off of a major low like this. I mean, we
Mhm.
had a 90. This is the second chance we're working with the 90 up here.
Right.
So that's the big picture. So what's the big picture? Well, we could still go up and touch this. So we're not quite there yet. And long as we're above 48.51, which kind of locks in the old highs,
Yeah.
which we spent a
Yep.
lot of time putting in, right?
Yep.
Well, it's bullish. That's what we can say.
Right. As disbelieving as it may seem to a lot of people, that's exactly right. If we
And
if we consolidate above that previous high, you know, in December highs, it's bullish.
mhm. And in the meantime, as we're going up there, normally the last leg will, usually the last leg will probably, point the way to some kind of a termination.
Mhm.
So it could happen this time. So we have to be aware of it. And sometimes these terminations come in, so let's take a look at what we got here. Hold on. So this is a calendar day chart. So you can almost say it's a degree chart because we're including the weekends and everything.
Right.
And if we did that, we actually did a 90
Yesterday, right?
degree run. Yeah, yesterday. So 89, 90, 91, we're in the mix, right?
Yep.
Now, obviously, 90-day runs can only come so often.
Right.
It's 3 months, how often can you get those?
Mhm.
So, well, you can get 4 a year. How about that? Coming
Yep.
off the same low.
Right.
Well, the point is not that common. And because the way we did the 90, that we really, really ran into it. I mean, if we were just under the 90 degrees in price, this would be beautiful textbook kind of a move up.
Right.
The only thing sort of getting in the way is that we're above the square, sure, but sometimes there's overshoot because of, sentiment and other kind of mechanisms happening. It can overshoot, but we didn't go high enough to really get out of far enough for me to think that we're completely safe.
Mhm.
Okay. Normally this would be, but with the 90 in time, it's kind of a big deal, especially since it's the last leg that terminates the bigger cycles. And coming from the low back in October, we're very close to 180 up, right? So, so because of that, I would say, we got to be a little bit cautious next week, and we can watch the price action, and that's why we use the 30, because then we can really kind of see, as the sort of the course corrects, we can kind of see it as it's developing, let's say. So 48.94 is the level we want to watch next week. If we take this out, we want a little bit, I mean, it's fine. You could take it out, correct down to 48, 48, 42, and still be fine in the big picture. But because of that 90 that came in yesterday, we want to really watch this, Now, somehow Monday, Tuesday, we get on top of 49.26. Great. Forget the 90 cycle. It's not working. We're going on to bigger things. Now, if we can't hold above 49.25, we take out 48.94. Well, I would say that's kind of like a yellow light,
Some
and
sort of correction has started.
exactly. And if we take out 48.70, that's a little bit more of a thing. And if we take out 48.42, almost 100 points down, clearly something's happening, and that 90 might be in works. Because if we're blowing into end of a cycle, we're not going to correct that deep. The corrections get shallower and shallower.
Sure.
You know what I mean? Like, you can see how these, some of these other corrections are much big, but when we're going into the move, they're very, very shallow moves. So far it's been very shallow. So, it's working some kind of a leg, and we haven't seen anything like this, which is a bigger correction.
Sure.
Or like here, these bigger corrections within the larger move, right?
Right.
So that's what's up. I think it's the general direction's good. We have to respect the price. That's great. But because we have this thing in time, we want to watch those price levels I just talked about in the 30-minute. And clearly, if we get under 48.51 in a hurry on some bad news or something, then that's locked into place.
That's trouble. Yep.
Yeah, because of the 90. Oh, here's the 90 here. So as you can see, it's 90 degrees. and that's right there at the high.
Mm-hmm.
It's right in there. So calendar day, 90 degrees is a little bit off. So if you take the 90 degrees, it came in pretty much on that high bar, which is cool.
Yep.
Any questions?
I don't think so. I think it's bullish until proven otherwise right now.
Right. And the otherwise parts are the ones that we just covered, right?
The price levels that we
And
covered.
we
That's
know
right.
where 49, 46 comes in. So for example, if we start going lower, even coming through the 30-minute levels we talked about, before we take out 49, 46, we know there's a 180 up here, and we know the 90 in time squaring out here. Yeah, exactly. So we kind of know there's something's up. And that's how markets are, you guys. They're not ever super clean, but the general pattern is there. So that's what we're catching here. We got the general pattern. We have a 180 from there. We basically
90.
have 90. And it hasn't really taken out the next eighth of the square, which is kind of the overspill from markets running hard. So we're kind of in the, we're okay. And if we can hold about 48.51 basis the daily chart, we're in great shape. I think we can definitely go much higher. So that's my take.
It's good.
Go on the weekly. Yeah. Okay. So here's the weekly, which
Another up bar.
another bar looking pretty good, actually.
Yeah, it is.
So weekly, I mean, what can you say? It just looks great. To stay long. We have 1, 2, 3 weeks up. After that one correction. So it's possible that we get a corrective week. But boy, when you're breaking out of these kind of very long-term historic highs, they can really catch fire, they can really go. So you don't want to just jump in front blindly. You want to have some kind of actual price action telling you that is working the other side. But otherwise, hey, you see the steep angle we're going, let it go. Let's ride it. You can play the long side as it's appropriate. And we know there's a 90 coming up here. So let me show you where that is, which is really the 180 that we looked at earlier. So there it is.
Yep, that's the 180. Yep.
So that's 3/4 of a square in time. Okay, basis weekly. So 3/4 by full square. Now that's, the markets can score it at these levels. They're very sneaky. They don't always go 90 by 90. And so we have to be aware, now you guys know the levels and everything, and there's a 90 up here, which is the same as a 180 that we had on the daily. So just keep an eye out for that. If we blow through everything, well, there's a geometric ABCD finishing up, sort of the grand finish at 52.60 almost.
There you go.
No laugh though, man.
It could get there. It could
Definitely,
absolutely get there.
definitely get there.
Yep.
But just, I mean, it took us a while to get to 90. So now that we're here, I think it's important to talk about that. So there it is. And
Nice.
yeah, just keep that in mind. I think it's important to not be completely oblivious to what's happening. All right, let's move on to bonds. Bonds are basically stuck in the box that we drew up. We had a support level here. Not doing great. It looks like it wants to slip out. It's sort of hanging by its teeth.
It's also, we just about completed an ABCD too, if you put that in there.
Right there. Yeah.
Yeah, just barely another couple ticks and we'll get it. So that may be stalling it too here, holding it up so far.
Yeah, well, I would say it's there,
Yeah, that's right.
So ABCD corrections are pretty bullish, if we get it like that. Now, the thing to watch for is if the ABC, once it's been put in and we take out that low, it's very bearish.
It is. That's right.
Right?
If it holds, it's bullish. If it breaks through, look out.
If it breaks through, there's no consolidation. It's going to go.
Yep.
So, watch for that. In the meantime, we're still in the box, and in the box is sort of churning. So it's continuing to churn here, which I would say would be bearish at this point, because once our good ABCD finishes off, we should get a rally off of that.
A reaction, yeah.
Reaction and at least to take out, this 123.5 area up here.
Mhm.
And this would be how a Gartley ends, right? So if that was a Gartley, X, A, B, C, D, right? You
Mhm.
would expect it to
move.
yeah, to move. So, all right. That's really it. It's stuck in the box. 119.16 is sort of the place. It's the bottom of the box. If we slip below and we take out the low from yesterday or Wednesday, I think then the 50% of the square is the target, which is 1609.
Mhm.
Yeah, and the trend is down. We're holding the trend line. Resistance, we stopped at 72. We had all this overhead on top of it. So it's correcting at the right place. If we're really going to go at it, we can't get too far below much further than this because we have to punch through any of this, which I don't think it's going to happen. So,
Sure.
let's just see how we get down. So the bonds are kind of weak, especially if we take out those lows we talked about. Moving on to the weekly bonds. It looks a lot cleaner, a lot better because we went into the box, which is really the resistance level here. And we immediately turned down. Had a
Yeah.
nice inside bar. Here's a good example of inside bar when the low of the inside bar gets taken out, So we had 1-2 weeks of follow through. 3 weeks would be normal, So we definitely have more room to go downwards. 114 would be the next target again, but if we get there, then we're probably going to take this out. So it's an ongoing story. Maybe we'll get up to 216. We'll see how that works out. Anything you want to add?
Nope. I think that's good coverage on it.
And that's 216 is a big deal, basis weekly. So we definitely want to watch that. We have that's a little ways away. 180 we passed. Yeah, it looks weak. Otherwise, we would have turned by now.
Mm-hmm.
So, yeah. Okay. Moving on to crude.
Look at that. Nice week.
Pretty good. Let me get to the weekly. I mean, daily.
Mm-hmm.
Start there. Got a little too excited with the. Now, this is classic, eh? I love this market. Look at this. We were, we held here. We're squared out there, and we've been talking about, hey, this squared out. We're making higher lows. Looks like it's going to break to the upside.
Yep.
Well, there you go. You broke to the upside, and we drew that little triangle up and said, once it takes this out, we settle above 73.50. We should move higher towards 83. Yep. And we did exactly all of those steps, right? We were in the triangle, broke above, got to 73.5. Inside day, low was on our mark. Next day, what do? Take out the high of the inside day bar, right? And what happens? It usually follow through, and there's your follow through. Just super easy to read. And now we're kind of settled above 73.5, but if we take the square 72 and once we settle above the 50% of the square, which is, let's say 77, then, pretty safe. We can move higher. And this is why bonds can't really continue to rally. Part of the reason. And while we were doing this, Ben, I remember us talking about how I was talking about some of the oil related stocks, they were getting bought up, a lot of money going in there. So this is why, these guys always are ahead of the game. And so it looks good. So let's leave it. Now go ahead and, we should be you guys should have been trading it from 73.50. So here we go. Anything you want to add?
No, I'm going to cover it briefly. So I'll cover it then when I do it.
All right. So here's the weekly, and this is beautiful because you can see how we, the same triangle, but we can see how we built it up, push right into the 50% line. And, between last week and Monday, you can see Tuesday, you can see we sort of broke out. Now we're moving hard up into the next level, which is where we have a box there, which is really 79.5 or so. And, well, we'll see when we get there. But if it consolidates up in this area now, like we did here, it's a similar box. That's usually bullish, especially coming off of a low. And looks good.
Yes, it does.
Mm-hmm. We have gold. Not much happened, other than the fact that we held above. I mean, isn't it great to have these squares? We have
Yeah,
50% line right there. If I
holding
didn't
it.
have that, I wouldn't know what the hell's happening here.
No,
I wouldn't.
it's sloppy, but there are clues that it's holding support very well.
Like if I was watching anything else, I'd be lost. That's all I know. So we're holding about 50% of the square, which is just above 2000. And that's, let's say 2005. And long as we're above there, it's okay. It's in a pretty strong position. Now, if we slip below that, well, it's just going to consolidate here longer, probably between 1940 and 2000. So it's either here or there, but up in here, uh, obviously would mean something different, which means, people are still a little bit nervous. And if we get under 2000, then, it's still good. Just not, we're done with the fun part. We're just correcting and let it consolidate and finish up the round, and we can deal with it. And well, let me zoom in here. So here's the weekly gold. You can see 2000 held perfectly, our line there. Now, if we can hold about up in here, it's very bullish. You can tell. You can tell.
Yep.
And if we slip under that, well, we have a wide band, 1919, to 2000. So a lot of things can happen in here, and we've consolidated. The good thing is we've got in here so many times. If we hold here without dropping really back down to 1919, it's very bullish. Gold remains very bullish. All right. So here's what happens. We talked about ABCD correction on a run. So look, see how it happens. This is what should happen. And the other market we looked at. So if this is normal, so if it just slips through, then it gets very weak and is bearish. Let's move on to copper.
The last thing I'd say on gold was we had a weekly inside bar and a monthly inside bar, and that kind of tells you the whole story.
Wow, yeah. Watch it close. Watch
Yep.
it close.
Yep.
So copper, well, we're wrapping around our level again. What to do? There's not much to do till we break out, guys. So 383 is the level. I mean, the good news is we broke out to the upside, and we're holding above this 50% of the square, and we broke out on pretty good volume, pretty good range, and then we had a very, very tight couple of days. And this is good generally, but 383 is really the level. If we hold here, we can kind of move up a little. I think we can get something going, mainly because we have these higher lows being made. So not much, but watch that 383 level. That's the key here. Then we move on to the copper weekly. Well, guess where we banged up into? Exactly the bottom of the fork. And we'll see. I mean, that's kind of resistance, so we really need to pick up some momentum to get through it, get on the other side of it. And we don't have to use this fork here, but I'm just going to keep it for next few weeks. So for now, we're outside of the triangle. We broke out. We came back and kissed it from the upside, and it's kind of in a bullish position. We talked about this 364 being a key level for the for copper on the weekly basis. So it's okay. It's
and that weekly took out 2 weeks worth of highs.
Yeah, right. Yeah. So it's starting to wake up. And I mentioned last week how the Hang Seng kind of bottomed about the same time copper did, and they both kind of moved up afterwards. So I don't know if it's tied, but they definitely match the pattern. Next we have the dollar. What happened? The curse of the 50%. So we came up into the 50% of the square. We're kind of stuck there. Not much. I think it's bullish. Let's just wait. Let the market rest a bit. The fact that we're really just pushing up against that, normally it's a bullish sign. It's a quiet market, and we broke out of the triangle. We're holding pretty well. We held at the major support. We came down 60 bars, which is the dollar cycle. So everything looks okay. And if we, as you guys know, if we can get on top of the square, let's say 103.5 and settle on the upside, I think then we can probably start moving higher. I just don't know if we're ready to start the leg here, or are we going to consolidate a little bit more and then start? But that's kind of the state of the state. Want to add anything, Ben?
No, I think that's that half square is the key, right?
Yeah. Right now, that's the key. Okay, dollar weekly. Well, there you go. Not much to say. We held the lows. Very good. Now, let's see where we go. Here's another inside bar before we broke to the upside. There's the inside last week, right? Or the week before. And we took the high out, and we have two higher highs coming up. So, and if we break through that 50%, then I think it opens up a lot more.
Mm-hmm.
Let's go to the euro. Well, there's something that got to the 50%. It's 108. And well, we went up to the 72. If you guys remember, we talked about that being resistance, and we were looking for some kind of a counter trend. And we got that. Looks like an ABCD going the other way. And since we like to put these on, let's see what it looks like. Yeah, it's a little lower. It's long as it's about 108, it's okay. It's firm because it's half of the square. If we slip under, we have a little bit more to go. Maybe it'll complete the ABCD down. Either way, I think it's interesting how dollar and the euro is exactly at 50% of square. So either way, they're going to break to one or the other side. So keep an eye out for that. The level.
Mm-hmm. Been there for a while.
Yep. Speaking of been there for a while.
The box, the green box.
Yeah, and we're coming closer and closer to 108. So this is the key area. If you drop, then naturally your target will become the lower line, which would be around 104. So a lot of move over there. So watch that. It's been weak. It's possible that we do an inside day or bounce or something before we go lower. But if we take this out, we've had this number there for a while, and it's important. So just remember that. And well, I guess trade accordingly, right?
Exactly.
It's kind of easy. It's not going crazy, and we know the levels.
Right.
Are you covering natural gas?
No, but that
Okay.
ABCD is coming up.
Yeah, so I'll cover it. So yeah, ABCD is coming up. That looks like that was a good call, Ben, because that looks like where it's going. And that, I mean, if it's going to go there, I might as well take out this low,
Exactly.
and just do a complete flush and reverse. So, and we talked about this 120 coming off the high being the area where its price has been, this 253, 252 areas where it's been sort of rotating through. And well, let's let it play out. It's got a little bit more. I wouldn't be shorting this at this point unless you can do it intraday and catch it. For now, let's see how the low comes in and if we do a flush here or not. And it's going to be interesting how this all finishes up. I mean, long term, this is very bullish. It's just a matter of, when do we finish putting the low in?
Right. Finish the business it needs to finish.
And that can take, all kinds of time.
And this could be the clean out move. Who knows? We'll see.
Well, flush, yeah, this definitely has all the markings of a clean out move.
Yep.
All right. Here's the ES. We talked about the 90. We called that low in the Hang Seng.
That was beautiful. Yep.
How about that?
Very nice.
Yep. And now we're up. So here we just waited to see if the pullback, correction is a higher low. And if it is,
in business. Yep.
We're in business and yeah. Well, Ben, almost to the square, not quite.
Not quite, but kind of the same story. Like, with your ES, we saw it reaching for the 180. Here we're reaching up to the next full square here. We've had, 2 down days. So, if we have a down day Monday, a down day Tuesday, then you got to start saying, hey, something a little different's happening. Because if you look coming into the high, an inside day, one down day up, right? Here we had 1, 2, 3, 4, and then up. So let's see. The key thing for me is this half square, right? We pull back to the half square. We'll hold the trend line. We hold structural support. It's bullish. If we lose it, then we can say, okay, we're in consolidation territory. Maybe we slop around here. But if we lose this one, then we got to say something else is going on.
Right.
But it's the same sort of thing. We've got 90 calendar days. We went up into that, that 45. So, is it bearish? No. Do we, jump in and buy with both hands? No problems? No. We watch the pullbacks. We see if we pull back to here in reverse, we can have a decent sort of risk reward trade to take a shot at the upside. But we're just in a situation because of the things you cited, the cycles we're talking about time wise, the price levels that we're hitting in terms of degrees. It's smart to be cautious with a bullish bias, until we start taking out support or start taking out, squares or half squares, the bias remains bullish.
Right.
And you'll see the same thing when we take a look at the weekly. Right. We had another up week, clearly well off the highs, closing more near the lows. Yeah, we're after the close. So we're closing more near the lows of the week. So do we get a down bar next week? Let's see. This week we were saying, hey, we wanted to see us take out the high of the previous week. We did that. So again, another bullish evidence. And this full square here on the weekly, we're talking about, 16,900 roughly.
Yeah.
We want to stay above that on pullbacks, and then it's very bullish. If we lose that and get stuck under here, then we got something else going on. Anything else you want to add here, Barry, on that, on NQs?
Yeah, I mean it's in a good strong position, but it could be, it could just pull back to your half square point and still be just fine, perfectly bullish. So
absolutely.
Just happens to be the trend lines there too, but
I know it's a nice confluence too.
Yeah, it's a good combo.
And everybody, if you don't know, if you're new to the podcast or you're new to what we do, all the levels that we talk about, that I talk about, in addition to all the markets I cover, even though I don't talk about them, I update the levels every week, so you could see sort of like an upper level, lower level, and a range for each market. So these levels are all on a Google Doc spreadsheet that I'll send a link to. Here's an interesting. We cover this one every week, and man, this thing is bouncing around. Look at Bitcoin.
Yeah, saw that.
So last week we were talking about, we were stuck under this half square, and we said it was bearish, and we had some bearish price action. But man, look at that structure. Came right down, sat on top of those highs, and then today, after 2 inside days, boom, big update. But look where it stopped.
And look at the structure above now, right?
Yeah, now we've got a lot of overhead, and we got the half square here.
Right.
And again, this is our sort of promotion and commercial for the squares. We get nothing for them, but we definitely encourage you to use them, because when you find the vibration of the market, it gives you a very useful tool for framing price action and understanding, what's more likely to happen, one thing or another. Like, for example, with Bitcoin, we know as long as we're stuck under this half square, that it's more likely that we're either going to consolidate or come back down here and test this full square. Whereas if we shoot above it and sit on top, we know it's more likely we're going to get up here. And that's the beauty and the power of the squares. This timing was looking, and time and price is looking really good now based on that reaction. That's a very sort of strong counter trend reaction, off that high.
Yeah.
Now we want to see, an ultimate setup would be is if we went back up in here, banged up against the full square and failed. That would be a fantastic short. Also, if we fail here, because again, it gives you a good risk reward. Once we get above and settle above, you got to get out of that short if you're on it. Anything else to add here on Bitcoin?
Well, the low came in exactly at one of my squares, which is 180 degrees up from the low last November. So if we take out the low in Bitcoin, then pretty much where your line is, but mine's a little bit higher.
Right.
But if we take that out, then I think we have a, much weaker conditions coming up. But right now it's okay. It's in good shape above that square,
Sure. Yep.
above that low, weekly low.
Yeah, let's talk about let's move on to the commodities. We had some decent price action in commodities. I'll give you an overview of a few, and then we'll go into the charts of the ones we want you to focus on. On the grains, we're going to talk about wheat, corn, and soybeans. Saw some life off the bottom, but they're starting to pull back, and now I want to look and see, do we get a higher low on those? If we get a higher low, then we've got something to trade against and sort of green shoots that we can use to see if that bottom that we saw earlier this week or late last week are good, if those bottoms are good. So we're going to talk about wheat. On the softs, cotton started perking up. We just basically moved to the top of the channel. We had a weekly up bar, which is the first since November of 23. So that's decent, 3 months. And now we had a weekly up bar. So cotton's on the radar, not quite ready to do it yet. I want to see a breakout of the channel and a retest.
Yep.
Cocoa, I talked about this during the week, and I'm going to show you in a couple other markets something similar. On a monthly basis, I had a 24-year ABCD, a massive ABCD that we hit this past week, and now we're sort of stalling at the high. So that's an interesting thing to watch. If you didn't see it, go check my feed. You can see the post where they made that massive ABCD high. And I put that thing on like 2-3 years ago, just saying, okay, let's see that this is a possible target, and we hit it. Now let's see if we get a reaction off of it, that might set up. Coffee, we're going to talk about. Gold and silver, Barry talked about. He also talked about copper. I'm going to briefly spend some time on copper. Crude, I'm going to spend a brief time on that. Barry covered that, but I want to show you a couple things there. And then nat gas, we talked about the clean out move there. So let's talk about wheat. So wheat, unlike corn and soybeans that put in lows here on the 18th, 19th of January, they put in their lower lows. We got a higher low out of wheat here.
Yeah.
And now we're starting to get a pullback. What I want to do is see, once we get the reversal off this pullback, assuming that this low holds or this low holds, it could be the potential of catching that fast third move, right? The third one could be coming. But this low here that came in at these confluence of trend lines and on the full square was a really good low. Now we're going to see what happens, because we had we had these 3 or 4 up days. We had an inside day. We had a down bar. So this is one down. I'm really curious to see what we get Monday. If we get a reversal up Monday, it'll be a very, very strong signal. That means we want to get going on wheat, and jump in on wheat. For the weekly, we had an up bar. The monthly ABCD target on this one, I want you to check this out. Since Coco hit, I wanted to show everyone this. Here's what the monthly ABCD looks like on this one. And again, it's one going back to 2000, so it would be a massive ABCD. Target up here is a little over 1500. So that's a real possibility on wheat.
Yeah.
The big thing, the other big thing on the monthly here is this half square. We're sort of battling with it, going crisscrossing it. It's around, I think, around 607. We close over that area on a monthly basis. That will be very bullish. And then we want to obviously clear it and move up, and see this. We had, one up bar, one down bar. If we can get another up bar next month, that'll be another good sign in wheat. Anything to add on wheat, Barry? I know you like it. You called the low on it in November.
Yeah, I think we definitely need to hold the 573. There's no question. Yep. So long as we're above that, and that lower trend line basically kind of covers that, I think we're okay.
Yeah. So watch for the daily reversal here as a sign that, okay, this is just a little pullback, and then it's ready to go again. Watch that one.
Yeah, actually, taking out today's high would kind of click it into place.
Mm-hmm. All right, let's take a look at coffee. Interesting thing in coffee, right? It was battling all week, 1, 2, 3, 4, 5 days, all week with this full square, right? And we closed today over it, closed the week over it. On a big push we can get here next week, this thing can be up and gone. Because remember, this was sort of the first move out of the bottom. This was the first pullback where we squared out on a daily basis, 27 by 27, had a nice move out of here, and then did this sort of battle at this at the full square, and now we got the weekly close over that full square. So I think this thing is ready. I would really, really want people to watch it closely next week because it could catch legs. Again, we're always trying to isolate and catch this third move. 1, 2, and this would be 3 on the daily. Let's go to the weekly. Show you a couple things here. Weekly's battling at this full square. Key thing here is we got that reversal that I said we wanted to see, to give us more confidence that this first pullback was over. So we had the down bar last week. This week we have an up bar. So we have a weekly reversal to throw into the mix, which helps us think about timing. Like this might be a big push next week if we can get through that full square. And then let's also take a look at the monthly and see where that ABC targets. ABC target there was around 356, 357. So we have a lot of room to run if this thing really wants to go. And what we're hoping to catch is, one of these.
Yep.
So that's coffee. It's one of the best positioned commodities, I think, right now in terms of the potential for a bullish move.
Mm-hmm.
What are you seeing? Anything different? Any flies in the ointment?
No fly as long as we go higher. Well, it's just that, you got these little 4 bars peaking above that square 90 there, 90 level.
Mm-hmm.
I think we can sort of get above that at this point. It'll just break to the upside and get settled above.
That's right.
Yeah.
And I think that timing might be soon. We'll see.
And it's not stopping at a, kind of a weird place. It's really, we're one cycle around the square of 90, square of 9.
Mm-hmm.
So, we're right up at this 193.75. It's resistance. Once we can settle above that, we know we can go another round. So it really is one of those levels we got to break through.
Absolutely. And that's why I'm giving the heads up, because when it goes, it goes.
Mm-hmm.
I mean, you can even see this, and this isn't a third wave. I mean, look how persistent it can go when it's ready to go.
Right.
You get 5, 6, 7, 8 bars up like this.
Mm-hmm. Mm-hmm.
And just the price action at the end of the week, beginning of the week, I was like, oh, it looks like we're going to break out. And then we started, selling off. And then today, when I saw that huge reversal off the morning low, I said, wow, someone's wanting to own that. And then I looked at the weeklies and looked at the 4 hours, and some momentum may start kicking in next week. We'll see.
Mm-hmm.
We'll see. All right, let's jump to copper. I'll show you a couple things here. Of course, how often we talk about that. We settle right on the full square at the end of the week.
Mm-hmm.
So this is 385, 386 level is really important. Next week we want to see. So we got this down bar today. Can we reverse that, and can we settle above that 386? If we can, we can be up and out, and this thing could really be moving out. The other thing to notice, and we've talked about this before, is when you get this sort of beginning to curl, right? Because the curling pattern that you get with the higher lows,
Mm-hmm.
you start seeing momentum kick in. And look at the move off of this low here, Barry. You had 1, 2, and then the last 2 bars really pushed strong.
Yeah, good reversal.
Yeah, so there's something interesting in the copper, especially since people have been sort of doubting it and dismissing it all year. This thing may run. Let's look at the weekly. So we had a weekly reversal here, a lot like the coffee, right? We had this pullback and now we have a weekly reversal. Can we add to that next week and make another high? And as I was talking about when you were showing the weekly, we took out 2 weeks worth of price action with this week's bar. Again, another sort of bullish sign. From a bigger picture, if we do a big giant ABCD here, gets us up to around $6 copper.
Mhm.
And that's the possibility, right? And you can see on a monthly basis, we've been in this sort of big triangle,
Yeah, it's very
for the
big.
last year and a half, 2 years.
Yep.
And if we break out of that, you know, this is the area that I think we can start looking for copper.
All right.
I know you covered it. Do you have anything else you want to add based on the levels and the charts that I'm showing
Well, it's
here?
critical we don't, the breakout bar, you see the big wide range bar, it's critical we don't come back and take the low out of that.
This one right
2
here.
days ago. Yeah. We
Mhm.
don't want to take the low out. As long as we're hanging out above that, we're okay. We're moving in the right direction. And hopefully, we can hold above 282, 283, that area, and we'll see.
Yeah.
It's starting.
Yep.
It's starting to. It's the first try. After the lows, we came the full. That pullback that we got. We're coming off of that pullback coming after the October lows. So it's an
Mhm.
important pullback, and now it looks like we're moving fairly. It looks, it looks solid. So let's just.
And one of the things you do talk about is when you get a sort of a pullback, you want to see a nice sharp move out of it. And that's what we got.
Yeah.
And that's what was getting my attention. It wasn't like, let me find one that's just not so sharp and it makes you think, oh, it's not going to happen.
Yeah, like the first couple that
Like,
came off the. Yeah.
yeah, like these, like you
Yeah.
got them, like, that's it's sloppy, it's choppy, it's up and down, it's, sideways without making much movement, like this in here,
Mm-hmm.
right? Um, so this the steepness of it and it hit the low and then took off out of there. It caught my eye and said, okay, we got to take a look at copper. So let's see if there's some follow through next week.
Mm-hmm.
Last one we want to look at is crude. And here's another one. You pointed it out. We had this triangle drawn in. We had this 73 and change. That was yours is 73 and a half, mine's 73.74, was critical to get above. And we just pushed, ended the week on the highs.
Yeah.
This to me looks headed for the full square,
Uh-huh.
which is around 85. It's kind of similar. I think it's similar to your short-term target. Let me show you the other thing on a weekly. I wanted to show you what a weekly ABCD looks like here. That gets us up to around 99, almost 100, 99.60, 99.65.
Mm-hmm.
The thing that I was interested in seeing here was we got a weekly close over this half square on a weekly basis, right? Which was 76.75. So we closed above that. If we can, open in the same area and then push up and clear this half square, it opens up the full square on a weekly basis, which is, 89.25.
Yeah.
So there's something going on, something bullish, because you can see we had what 6, 7 weeks of consolidation here, and now we took it out with this week's bar.
Yeah.
We took out all these highs.
Yep. Yep.
So weekly, monthly basis, this thing is looking fairly strong. And that's it on the commodity side. The interesting thing to me is it's sort of one from each group.
Mm-hmm.
And it's not like, oh, it's all in the softs or it's all in the grains. So there's some money that's looking for places where, where it's going to be treated well. And it's hard to like draw a conclusion on it, but you got crude, you got copper, you got coffee, you got wheat. Um, the copper and the crude, you could say, well, everybody that was calling for an economic collapse, that's probably not going to happen,
Mhm.
right? Because those are things that are tied to economic activity. So, maybe the economy is going to hold up longer than people think. Barry, one of the things I wanted to, we usually get an end of the podcast topic. Today, I wanted to talk about like when you are at these critical junctures, like the 90 and the timing.
Mhm.
Where's your focus, right? Is because I hear a lot of people say, oh, when a cycle hits, like, oh, is it a high or is it a low? It looks like it's this, it looks like it's that. How do you not get sort of caught up with a bias of, okay, we rose into it, so it should mark a high and we should go straight down, right? We should start going down. What do you
Mhm.
do that keeps you from falling for those biases? Like because it was up, now it's got to be down, or because it was down, now it's got to be up when we hit
Mhm.
a timing or a price or a cycle thing. Because I think as a young trader, I got caught in that, right? I
Mhm.
got caught up in that, like, okay, if we're rising into it and it's an important, like a 90 or it's a 180 or it's a it's a big cycle, we should
Mhm.
reverse, right?
Right.
That's what cycles do. They change the direction. So how do you sort of discipline yourself or prevent yourself from getting caught up in that?
Do you want to pass the screen that I can?
Yeah. And then you could show examples. People, think the cycles are the holy grail, right? Like, this is the date, so it's got to be a turn, right? In the opposite direction of where you
Mhm.
came in.
Mhm. Well, I think that thinking comes from, well, basically how it's been taught, especially if you read Gann's books, Gann always said, well, it comes in exactly at this point, exactly at 45, exactly at 90. And, we have to remember he was also a good salesman, you know,
Mm-hmm.
but if you really study the actual charts, you can see, yeah, some of them came in exactly, some are a little bit off. And as he got older, you can see, he adapted to all these different conditions. And the thing that I picked up or that helps me is to wait for that counter trend.
Mm-hmm.
Now, in doing so, yeah, you're going to give up a little bit. You're not going to catch the high tick, but the game is not about catching the high tick. It's about trading. It's about making a profit
Mm-hmm.
and managing your risk. So if you're trying to catch the high risk, I mean, the high tick all through here, you could be shorting. Why not? There's always a reason.
Right.
So, and I think what happened here is a good illustration because it wasn't exactly textbook.
Mm-hmm.
So it's a good one to study. So we came up into a really good square.
90 by 45 is fantastic,
It's a
by the
very
way.
good square. I mean, the one
Yeah.
next to 90 by 90, which is also fantastic, right?
Right.
So we're looking for it to go lower, which it did. And short term, you can trade that. And then we were looking for a counter trend, which we got. Now, after we get a counter trend, the idea of a counter trend is you can basically sell the high tick of a counter trend if you can isolate that. Okay.
Mm-hmm.
That's the idea, but you don't have to, but you can. And there's two ways to do that. You can sell it up in the end of the counter trend somewhere, or the safer move is you
The
wait for the low to
reversal.
get taken out, right?
Yeah. Mm-hmm.
And you get in here, but then you have a higher risk. If you get in somewhere in here, you have a lower risk. Um, but
It's
down
interesting
here,
too. It's higher risk, but a higher probability trade, and it's lower risk, but a lower probability trade because you don't have as much information.
exactly, exactly. But we don't know, so we just trade it, and to
Mm-hmm.
trade it. So once this came in, you can drop down to like what if you since you asked me, I drop down to lower time frames. I try to get positioned in here somewhere, and if it follows through, you want to manage your stops and everything,
Like, do you
and
use a 30-minute? Do you use 60-minute just to give
no,
people an idea?
I use 30. I use the 30 minute,
Mm-hmm.
and that we post. I just use this,
Right.
and I mean I have other 30s. This is the sort of the display model, right?
Right. Right.
And yeah, I use this pretty much same levels, and I use the 4 hour. But here you can kind of see how things are working out, and the part that we're talking about, once the high came in, we were looking to see, you know, here's the counter trend. The high came in up here.
Mm-hmm.
We sold off. Here comes the counter trend. But in here, you're waiting to see where when it starts and we broke the triangle here, started going lower. Okay, no risk. And I mean, low risk. We started going lower. Here's another place, went lower, lower, lower. At this point, you're basically on a risk-free trade,
Right.
right?
You take some
And
profits, you lower your stop.
yeah, you want to
all
cover
those
yourself a little
things.
bit. Exactly. Now, once it came up here and this low held above the consolidation right there,
That was a
you can
sign that
see,
things are turning.
yeah, if
Yes.
I put it exactly on the low, you can see where the consolidation was, right? It's right there.
Yep.
And we had that low there, that low, this high. There's a lot of things in there. And then we start to reverse. Well, we really have to watch it at that point. Once these highs get taken out,
Time to
then
go.
you have to say, well, it's probably going to go a little bit higher and maybe turn down. So then you watched, we had 48.18. There was a time we were watching 48.18 like a hawk. Now,
Right.
once it took it out, came back and settled above, there we go. You got to let it go at this point. Like, okay, we're going
Yep.
higher,
Yep.
and then you want to wait to see. I mean, market could do anything, but you once you have your levels, you have to really rely on them to help you guide. So, I mean, here we post all these levels, and so 48.18, we were watching this in real time. It came in and held above. This is what holding above, breaking above, holding above is about. And once that happened, we knew it was going to go,
It's bullish. Yeah.
test the 40s and test the
Mhm.
70 and test the 90. So level by level, it starts going higher. So to make a long story short, it's really about monitoring your levels, really the price action bar by bar after you started counted. As soon as the high of this low bar gets taken out, something's up, because
Right.
you want it to really go down and take this out
Take that
without
low
having
out.
any counter trends.
Yep.
Ideally, especially since we consolidated up here. You want it to go 1, 2, 3 days or something and take this out. It didn't. That's very suspicious. But overall, it was a little suspicious because you stopped exactly at the 72. So you
Right.
really kind of wanted to. And that's the thing. You have to be a little bit flexible with these things. We can't be so stuck to the tick that we kill.
Well, and that's the point I was going to make in summary is that there's a lot of art to this. I mean, we use geometry, we use math, we use these charts, but there also is art.
Yeah, well, yeah, and the art, you kind of get the hang of that by just doing. There's no
Yes.
getting around that.
It's a
And
feel that you develop.
and since we had a 72 here, that we really want to watch that because we don't want it to like settle above and take off, right? So
Mhm.
now this only happens between the 90 and the 72 because they're so close together.
Right.
So if you were getting short up here, you want to be careful. So to answer your question, in this situation, taking out the low of the first move down would be the place to really know, okay, now after this is taken out, we count a trend, then things are really rolling, right?
And this is what we call when we talk about sort of triangulating that corner and figuring out that, hey, this is a good high. It's not just how it comes in, it's like how do we come out of it, right? And what's
Yeah,
the price action coming out of it?
exactly. And that's where you need a little bit of experience to go, oh, that price action looks like this, the other thing. But if you just study the bars, you can see, we had a little triangle here, broke to the downside, clearly a false break to the down, right? And then we rallied up. That's why if a triangle breaks to the short side and then we take out in this case to the downside, we take out the high of the low bar, well, something's up. We
Yep.
shouldn't do that. We should just continue down at least 3-4 days if it's really
Right.
weak. But if one day down and the next day is back up, something's up, then you pause and you wait. And then what happened? We broke above. Well, then the whole shorting thing is over.
It's done.
It's done because now we want to see, well, that pattern is gone now, right? Now we don't have a first counter trend lower high. Now we're going higher. So there's something else happening at that point. So then, in this case, just to walk it through, we're waiting, as long as it's consolidating above that, any pullback will be by the dip kind of a pullback. So
that's great. I think that's a
Yeah.
terrific explanation.
No, thanks. It's because it's a little bit nuanced because there are a number of ways you can read it depending on the price action. But generally, at the most basic level, we're looking for a counter trend high, looking for a counter trend lower high, and to try to get position. And the lower high is not clean. Other things happen. there's only a couple of things happen. It blows out, we make newer high, we consolidate and we go lower, we
Right.
consolidate, we go higher, or
Yep.
we just continue to go lower. So you just watch for those scenarios and see which way the pattern points to.
You know what it boils down to, Barry? It boils down to the whole Mark Douglas thing that you have to understand, which is the market can do anything.
Yep.
And the sooner you can embrace that philosophy, the less chance there's going to be that you're going to get stuck in your view. Right. And because
Yeah.
I know that I was guilty of that when I first started out, is that,
Mm-hmm.
oh, we've had this massive rally and this is a huge cycle, so it's got to go down, right? It's got to go down. It can't possibly keep going up. Well, if you don't have the open mind of it can do anything, you're going to miss all the clues that show you and the footprints that show you that, hey, it in fact is going up. And that's a more probable outcome than what your bias is.
Well, I went through something similar. I mean, I started, I mean, I learned everything through original, Gann's material, where he talks about right to the high, right to the tick, right to the cent, right to the day, right?
Right.
And I'm like, dang it, I can't quite get that. What do you do? Then you have to read a little bit more about what he's talking about. Then he talks about, well, you use the counter trends. You can call the high, and we call the high here,
Mm-hmm.
but we didn't take it
Right.
because we weren't sure. That's just not in the long run. It's better to wait for the counter trend and then trade it because of much lower risk.
Mm-hmm.
And market will give you, all the markets will give you so many chances. There's no reason to, and there's nothing to prove. So what? So you caught the high, big deal,
Right.
But if you can catch the next move, great. So here we have plenty of chances to run up and we'll deal with it. But it's not always clear cut, right? So here we saw how 49.46 is 180 degrees up. So now we stuck between these two levels. I mean, what is it?
Yeah. Yeah.
Well, it's always many things, and you have to kind of sort it out with a cool head. You can't just say, get into an argument with the market. So
No, that's not one you'll win.
no, and if you can plan it out, so we have it planned. We know where the 180 is. We know 51 is here. We know if we take out 51 at this point and we started, start moving lower, well, we can definitely trade the short side. If we hang around here, start making higher lows and starting to break, well, we trade the long side. And the 30-minute helps you figure that out, sooner. But that's generally the rule. So it doesn't have to get complicated. You can keep it kind of loose, and the market basically tells you what it's going to do. So
It's fantastic, Barry. It really is. I mean, I hope people appreciate how valuable this is, because I was just thinking, wouldn't you have wanted to have somebody like tell you this when you were just starting out?
yes, yes.
You'd pay a lot less tuition in terms of the losses, wouldn't you?
Oh my God, yeah, and stress.
And stress. That's right. That's exactly right.
Yeah.
Because back then it was about being right? Like you had to be right. And now
Well, yeah,
you just have to get it right. You don't have to be right. You just got to get it right.
And well, the thing is, you have a lot more breathing room if you just wait for the high to come in, because look if you look at this chart, right? Let's just take all the highs just for fun. If you get this high, you don't have to nail it. You had all these weeks to get it,
Right.
to sell it, be on the short side.
Yep.
You didn't have to get that. Here's the first counter trend right here.
Yep.
And another counter trend. You got plenty of time to trade the short side. Here's the high. You didn't have to risk anything. Here's a counter trend, and here's a good counter trend, right?
Yeah, that's nice.
And then you got plenty of days to go down. Here's another one. Plenty of days to trade to the short side. It's same all the way around. This was a little bit trickier because we kept pumping higher, right?
Yeah.
But then you had to treat it accordingly. And here, I think we knew it had, I can't remember the square here, but there was more upside or something. There was a 90 up here.
Sure.
So we kept pumping up into, let me see, that was. And sometimes we use different squares because we want to, kind of understand what's
Catch the
happening.
vibration of the market. Yeah.
Yeah. So here we knew, it had to go up once you clear the 50, it had to go up there. And we went very close to here, came back, held it through here, the 50% of the square, made it back up again, 50% of the square, so this is how we use squares really to answer the question.
Yeah.
Once we know where the levels are, we know where to buy. When I say, well, you can buy the dips from here, well, you buy the dips like this. Here's another dip.
Yep.
we broke out, we held in here for a few days, very bullish, and boom, is what happened, right? And that's basically it. So you can use both of them to help you figure out where the lows come in, and then or highs, and then you can use the counter trends. So if you take this low and you say, well, where's the counter trend? Well, counter trend was right here, this bar.
Right there.
Yeah.
Next couple bars up,
Yeah.
another one.
Yep. There's one.
There's one.
There's one. Yep.
Yep.
So we have plenty. And in here we had 1, 2. There's the low bar, and you take out the low, the high of the low bar, and there you go. There you go. Move again. So, it's really about reading the price action. So that's really it.
Terrific show, Barry. Great coverage and good
Thanks,
educational stuff here. Like I said, they're gems. I hope everybody appreciates that. If you do, please subscribe, share the videos with your friends. We're 2024. We want to grow the channel and see what we can do.
And Ben, we almost have 1,000 subscribers, so I think we need like 40 or 50 more.
Yeah, get us to 1,000. Come on, people, you can do it.
I think if everybody just gave it to one friend, I think we'll have it.
Yeah, please do. That would be fantastic.
That'd be cool, right? Yeah.
But anyway, rest up for the weekend, everybody, because it's another busy week, and we get our monthlies print this week. We end the month of January and start February. So, and Barry and I were doing some before we recorded today. We were doing some cycle work, and man, there's some interesting stuff coming, and we'll be glad to share it once we get it as a decent product that we're happy with. So, enjoy your weekend, everybody, and we'll see you next week. Thanks, Barry.
You bet. Thanks a lot. Good job. We'll see you next week.
All right. Take care.
Ciao.
Bye-bye.